Okay, welcome everyone. Just a quick question again. If you can see only the Eurozone chart and not anything else, so my double screen, you can see my double screen, just the Eurozone chart, right? Yes, perfect. Okay, so once again, welcome everyone. This will be a bit unusual session because usually we generate a random number and backtest a random day from the previous 30 days. But in this session, I got requests that maybe 5 or 10 of you guys have messaged me to backtest the last recent day, Friday, that I've just made a case study about, because you understood the case study, but you got questions about the case study, and I believe it will be much easier to create a backtesting session around last Friday, I mean this week's Friday, than just explaining it one by one with questions. So do you think it will be a good idea to backtest Friday's price action and opportunities? It's not a good idea?
¿Qué pasa ahí? Está rico. Qué raro que no subiste fotillo y no me mandaste fotillo.
No quería decir.
Guys, please mute yourselves.
Yeah.
Bro, you are muted.
Yeah, I know. Yeah, no. Okay, so we'll backtest the day because I had seriously lots of questions and I just want to clear out these questions, and I believe it will be easier to break down everything than in a case study, because in a case study I can break things down but not in depth, and that's not an in-depth breakdown, and I can say about price action much more in backtesting sessions. So let me just break down the whole session. Let me just break down the whole of Friday's price action and backtest the trade opportunities. And actually, this will be a bit of a pre-week explanation too, because we'll actually analyze the last recent day on this week. So we could actually make a pre-market analysis too. But let's just start this session anyways. And before we start the session, we have to check the news, every single time. And that day was the 13th of May. And as you can see on this day, there were no high impact news. So we just started backtesting session on the 4-hour chart. Okay, so we talked about the price action region at this chart a lot in the markups, in the recap videos, everywhere. And as you can see, price is following a really extremely bearish pattern. Literally price is just breaking that below and breaking through demand zones over and over again. Why is it so? No. Okay, so breaking through demand zones over and over again, following an extremely bearish price action. And as you can see, price doesn't really like to come up to mitigate the extreme supply zones. Instead of mitigating the supply zones, it just likes to reverse in the middle of nowhere. And as you can see, here is the same scenario: supply zone, creating inefficient breakout structure to the downside, creating liquidity, and doesn't like to sweep the liquidity, doesn't like to tap the extreme supply zone, just continuing the overall movement, just like here, creating a breakout structure, creating a supply zone, small pullback, no tap of the supply, continuation, just like here, flip zone, this supply has flipped this demand zone, small pullback, no tap of the flip zone, continuation. And basically price is just following the same pattern over and over again. At this region, price had actually created a tap right here. It has tapped the last recent supply zone, and from this supply tap, price has swept all of the liquidity from below this demand zone, as you can see, and created another breakout structure here to the downside, created a swing low breakout structure to the downside with a huge inefficient movement, as you can see. And first question, I just want you to mark the last recent supply zone on my chart, please, which has created the break of the demand zone and the swing low point. Just mark it, please. Yeah, thank you. That was the last recent supply zone that has caused the break of the structure and the break of the demand zone. So we just draw this on our screen. And yeah, we have to zoom out because we have a higher time frame perspective too, because as you can see, if I switch to the weekly chart, you'll see that price is actually inside of a weekly low point. And I just wanted to talk about this price action perspective too, because it's important to understand. Maybe I've talked about this several times, but I have to clear this one more time because it seems like you don't really understand what I'm talking about. So I just want to clarify this one more time. As you can see on the weekly chart, price is still following a bearish pattern. So basically, timeframes are correlated. The 4-hour is doing the exact same movement as the weekly chart, right? So as you can see on the weekly chart, you can find downside movements, breakout structures, pullbacks, downside movement, breakout structures, pullback, downside movement, breakout structure, pullbacks, and basically price is creating the same over and over and over again. We are here at this price action region, as you can see, and the last recent breakout structure has happened from this supply zone right here and created this low point, as you can see. This low point has created the last recent pullback, and this pullback has mitigated some sort of decisional supply zone at this region. And after the mitigation of this supply zone, price couldn't break below the low point, as you can see. It just reacted on this low point. But after a reaction on this low point, price has created another pullback and tried to break above the last recent high point. We are still on the weekly chart. So price has tried to break above the last recent high point, but instead of breaking above the last recent high point, it just reacted on this supply zone up here. And after the supply reaction, price has created a change of character here on the weekly chart, as you can see. And from this weekly change of character, price has started to create another bearish impulsive movement to the downside, which is leading to a breakout structure to the downside, expectational breakout structure to the downside, of course. As you can see, price is currently at the last region of the low point. So basically, price is almost at the last demand zone, last price action region at this low point. And this low point is back from 2017. So this is a 2017 low point, and price is inside of this low point. But just following the overall higher time frame structure, it has a really, really high chance to break below this low point and create another breakout structure, a weekly breakout structure to the downside. And I'm asking you, what is the expectation order flow? What can we expect when price breaks below this low point and creates another breakout structure here to the downside? If this low point breaks, what is the expectation order flow we can expect in the future? Of course, not in the next week, not in the next days, in the next month or years. Exactly. That's the perfect expectation order flow, because after breaking structure to the downside, price usually creates a pullback, right? This is how a structure works. This is how a structure works, creating a low, for example, a bearish structure, creating a low movement, downside movement, creating an upside movement, respecting supply zone, creating another downside movement, creating an upside movement, respecting supply zone, creating another downside movement, breakout structure, creating upside movement, respecting supply zone. And basically, this is how price moves. This is what the structure looks like. And as you can see, comparing this previous price action region, for example, from 2010, 9, etc., price is following the same pattern over and over and over and over again. And this is the expectation order for. That's why I'm expecting that price will break below this low point. That's why I said months ago that price will break below this low point, and that's why I said price will break below this low point. I said that I'm expecting the break of this low point right here, and it happened, as you can see. And that's why I'm saying for days like price will break below this low point too, because that's the expectation order flow. We don't really care about the financial system. We don't really care about the financial news. We don't care about this. We just care about the technical analysis, right? And the technical analysis shows us that price is following a bearish pattern, and there's an expectation of break of structure to the downside, expectation of break of the weekly low. That's what you can expect from price on the higher time frame. But if you take a look at this, this higher weekly chart, creating pullbacks, breakout structures, pullback, breakout structures over and over again, just compare this weekly chart with the 4-hour chart. Just compare this weekly chart with the 4-hour chart. It's pretty similar, right? Creating the same exact movements over and over again, meaning we are trading the overall higher time frame trend, because the overall higher time frame trend right now on the weekly, on the monthly, on the daily, every single higher time frame is extremely bearish. It's literally extremely bearish, printing bearish candles on the weekly chart over and over again. So if we are trading with the 4-hour trend, we'll trade the main trend. That's our overall higher time frame main trend. And if you take a look at this is pretty similar to the weekly chart, creating breakout structures to the downside, pullbacks, breakout structures, pullback, breakout structure, pullback. So creating the exact same pattern like the weekly chart. Okay, so knowing the fact that we can expect a breakout structure right here to the downside, because that's the expectation order from the higher time frame. So knowing the fact that we can expect a breakout structure here to the downside, we'll be aiming for a short trades, right? We'll be aiming for mainly short trades. Okay, what else can we see on the 4-hour chart if I zoom in? We know what the higher time frame perspective is. Now we just have to care about the lower time frame perspective. We build the higher time frame perspective, that we are expecting a weekly breakout structure, that we are expecting another continuation to the downside. Now we have to build a lower time frame perspective, because if the weekly is showing that price is creating an extremely bearish pressure, the lower time frame can still create a pullback, and you'll be able to trade that pullback, because that pullback on the 15-minute chart, for example, can be the main trend of yours. But on the higher time frame, that will be counter trend, right? But we are trading on the 1-minute, so we care about the 15-minute trend more likely. So as you can see on the 4-hour chart, this was the last recent 4-hour demand zone right here inside of the weekly low. So below this demand zone, no valuable demand zone can be found. And prices broke below this demand zone with one huge inefficient movement to the downside, as you can see. And prices literally started to create a pullback right here. Okay, that's the 4-hour chart analysis, right? This is a pretty valid supply zone because this supply zone has broke below this demand zone, this structural low point, this demand zone, split loads of liquidity. And basically, this is a pretty valid demand supply zone because it created huge inefficiency too. So we are focusing only on this supply zone, or maybe we can find another supply zone, which is a buy to sell candle, sell to buy, sorry. I've showed you this in the last recent webinar, right? This is the last recent buy to sell supply candle, but it's unvaluable for me, so I don't really care about this candle. We'll be able to refine this on the 50-minute chart, of course. On the 50-minute chart, there will be a clean supply candle that is broke below this demand zone. But on the 4-hour chart, I don't really care about this buy to sell candle because it's too huge to be a zone actually. So I don't really care about it. Okay. Now price has created a pullback, as you can see. It's starting a pullback, reacting on a weekly low. And what can we expect when price creates this kind of movement? We can expect a reversal right here to the upside, because if price can break below this low point with one inefficient push can break below the weekly low point, we can expect the pullback to some higher supply area. From this higher supply area, price will be able to collect more orders, change of character, and from this supply zone, we can expect the order flow to break the last recent weekly low point right here to the downside. So yeah, that's the expectation order from the 4-hour chart. And I believe that's enough about the 4-hour chart. So let me just switch to the 15-minute chart because that will be much cleaner. And as you can see, this is how the 15-minute structure looks like. Now we just close this zone a little bit. This is how the 15-minute looks like. And actually, sorry, I will have to replay price to New York Open. So this was New York Open, yeah. I will have to replay. Perfect. So as I said, we'll be able to refine this buy to sell candle to a much cleaner 15-minute candle. And can you just mark that candle, please, for me? Mark the refinement of the 4-hour candle, please, guys. One at a time, please. Thank you. Yeah, exactly. That's the perfect candle. Thank you for showing. This is the perfect supply zone refinement of the 4-hour buy to sell candle, because the overall break of this demand zone and the overall inefficient push has started from this candle, as you can see. Remove this area from here, please. Thank you. The break of this demand zone has started from this candle. As you can see, before this candle, only weak belows could be found. These were big belows, no real breaks. And from this candle, inefficient break of this demand zone has started. What else can we see on the 15-minute chart? We can see that prices react on this supply zone, as you can see here at this reaction. And after a reaction, prices just created a huge inefficient movement to the downside, starting from this candle and change character on several places. That was the last recent demand zone. This was actually a flip zone. And this was the last recent demand zone. Here was a first change of character. Here was a second change of character. Here was the third change of character. So basically, this was a really strong change of character on the 15-minute chart, right? So it seems like the fractal confirmation is happening because breakout structure to the downside has happened on the 4-hour chart. 15-minute confirmation of the 4-hour zone has happened because there was several breakout structures and change of characters to the downside. So we can expect another breakout structure to the downside, another continuation to the downside, right? That's the expectation order flow right now that we are dealing with. Okay. But if you take a look at the 15-minute chart, you'll see that this was the last recent 15-minute supply zone that has caused the last recent 15-minute breakout structure and change of character. And this was a flip zone also, which has flipped this demand zone right here, as you can see. So this is a perfect flip zone. I will mark it right here as a change of character too. This was our change of character. And that's all about the 15-minute chart, basically. We can't really say more about the 15-minute chart. That's all about it. Okay. What else can we see? On the 5-minute chart, for example. On the 5-minute chart, we will see a much cleaner zone. As you can see, we can refine this over a 15-minute zone to this 5-minute zone. Okay, what can we expect right here? We have the last recent low point right here, which was the 4-hour weekly low point. 4-hour swing low point. This was our 4-hour swing low point, and we are expecting this low point to be broken, right? We are expecting this low point to be broken, and we can see 15-minute low point also, which was this one right here. This was the last recent 15-minute week swing low point. And if price breaks below this swing low point, the trend will be confirmed. The price will actually create another downside movement, and it will have a high chance to break below this weekly low point right here and this swing for our low point too. Okay, but what else can we see on the 5-minute chart? We can see that price has created a liquidity sweeping movement with this inefficient movement to the downside. So this inefficient movement has swept loads of liquidity from below this region, as you can see. And this movement has also created liquidity, which has been swept. Right here, there were liquidity, and after liquidity creation, and instead of respecting the supply zone, price has just created a change of character to the downside under the 5-minute chart, as you can see. So after the 5-minute change of character, prices started a bullish structure to the upside. Let me just mark the change of character right here. On the 5-minute chart, there was a change of character. Sorry, guys, just a minute. So yeah, there was a bullish change of character to the upside, and another break of structure to the upside starting from this candle. Okay, as you can see, this demand zone has started the break of structure to the upside, and basically all of these movements, all of these upside movements are being considered as counter trend movements because our overall trend, the overall higher time frame trend, is extremely bearish, right? So these change of characters, these break of structures to the upside were just counter trend movements. And what can we expect when this kind of scenario happens? What we can expect when prices create a break of structure and there's a less recent valuable supply zone that has changed character to the downside, and price is inside of a pullback and inside of a demand zone? What scenarios can we expect right here? I'm asking you guys. That's the first. Yeah. Exactly. Basically. Yeah. And that's the second. Thank you. These two scenarios can we expect right here. So basically the first scenario we can expect right here is the price will create a change of character right here on this demand zone, go up to this supply zone, tap the less recent valuable flipping supply zone, because this is a flipping 15-minute supply zone, tap the less recent flipping supply zone, create a change of character inside of this supply zone, and continue the overall movement to the downside and break below this low point. So that's our overall plan right here. And the second plan, the second scenario for this session is the price breaks below this demand zone, sorry. And if the break happens and the good entry criteria will be formed, we'll be able to enter in a short opportunity, targeting this low point or a break of structure point, right? Because this is a really, really important topic. And I had questions about this actual TP choosing in the case study too. So if there's no clear demand zone can be identified, or no clear, for example, supply, demand, any zone can be identified on the 5-minute or the 15-minute chart, what can we target? Because as it's written down in the PDF, as it's written being said in the video course, we are always targeting the less recent 15-minute/5-minute zones, right? Those are our overall target points. But what can we do when there's no clear 15-minute demand zone, when there's no 15-minute supply zone, and there's nothing to be targeted? We have two scenarios. The first scenario is to target the liquidity. If you target the liquidity, that will be perfectly fine, because you either enter after a liquidity or you either target the liquidity. Because if there's liquidity, there will be expected a reaction. Because if a liquidity is being swept, being targeted, then there will be a 100% reaction. Because, for example, there's liquidity, as you can see. This can be considered as liquidity. This is a perfect liquidity line. There's the first bottom, there's the second bottom. This is also a liquidity line right here. So we can target this liquidity line to the downside. If this break happens right here, if the break happens, and we already know that it happened because I made a case study about it. So we already know that the break of this zone will happen. That's a spoiler, no spoiler, I don't care. We know that this will happen. But what can we target? We can also target the previous low point. But combining the liquidity and the previous low point together will be the strongest target point if there is no targetable demand zone is available. Because if price, this is a really, really good example for this scenario that I'm just explaining. Because if price can break below this low point right here, if it can create a break of structure to the downside, then more likely the supply zone that has created a break right here, or the another break, won't be able to hold price. And if price can break below this low point, then price will sweep more liquidity from the upside, and the higher time frame supply zone will be tapped. Because we are talking about the second scenario, right? If price can break below this demand zone, and the supply is being left unmitigated, that if price can break below this low point, the structural low point, the swing 15-minute low point here, and it only wicks below this 15-minute low point, then price has to collect more liquidity, because if the break can't happen with the first push, that means there are no enough sell orders being placed in the market, meaning price has to collect more liquidity, price has to sweep more stop losses, and all of these stop losses will be converted into new orders. So if price can break below this low point, then the sweep of the upside liquidity will happen and the higher time frame supply tap will happen. This is the scenario that could happen right here. But the second scenario is the price breaks below this low point, create a breakout structure with the full body closure, reinspection of the less recent supply zone, and continuation to the downside. So these are the two scenarios. This was a scenario that you were guys actually confused about, because I've received messages about this, that why did I target that low point? That's why I've targeted this low point, because I don't know if it will be broken or if it will hold, or if there will be just a liquidity sweep. That's why I'm targeting that low point, because that's a pretty solid target point. And if you target low point, then after the TP hit, you'll be able to take more actions. If that break happens with a body closure, you'll be able to execute more short trades. If the body closure doesn't happen, then you'll be able to execute short trades. I mean, long trades to the upside to collect the liquidity, right? It's this easy. Just simply see what price is doing. And this has been said in the previous webinars also. I don't know in which webinar, that you can actually identify if it was just a liquidity sweeping movement or a change of character. And I've talked about this in the webinar, so please just check that video. So basically, that's all about the 15-minute and the 5-minute chart. So let me just switch to the 1-minute chart and start the overall backtesting session. Let me just refine these lines because my OCD is hard. So let's just start the session. So the overall plan was that the first plan is the change of character right here on this zone, and the tap of this zone, change of character right here, continuation to the downside. Second plan, break out this zone, break up this overall 5-minute zone, break below, continuation, targeting the less recent low point, or even taking more continuation trades right here. There are two scenarios inside of the second scenario. If price breaks below this low point with body closure, then we'll be able to look for more short trades on the less recent supply zone. If price can break below this low point with the body closure, then we'll be able to look for long trades up to the upside, right? This is our plan right here. And actually, that was my mistake in my Friday trade, and I will break that down too. So let's just start the session. I will play the candles. As you can see, strong supply reaction has happened right here. And in a counter trend, we need a really, really strong change of character. We need a really, really strong reaction or breakthrough the zones, because this is an extremely counter trend. So taking any long opportunity after the supply zone is being considered as an extremely risky and extremely counter trend. So I believe I even said this in the markup updates or a single markups, that this high point has to be broken in order to go along, because this can be really considered as a less recent high point. This is the less recent high point, and this is the second less recent high point. And in a counter trend trade, we need strong change of characters, right? So this was a counter trend trade. So we can consider this as a change of character to the upside, and we can't open a position right here or right here, because we need to see a strong change of character to the upside in order to take any long opportunity. So we are expecting a break of this zone. Okay, let me just continue. As you can see, price is reacting on the less recent demand zone right here, which has caused the weak change of character to the upside. And actually, this is the bleeding point of most of the traders that are trading with this strategy or trading with any smart money concepts, that they don't really know that if it's a counter trend trade or not a counter trend trade, and they don't really know that if they have to wait for a strong change of character or any kind of change of character, they can make a difference between the change of characters. And you guys can. You already have the sauce. You already know how to make difference in the change of characters. You already know how to take counter trend trades. You already know how to take pro trend trades, and what are the criteria for each of these trades. So just use it, because it's really, really helpful. It will protect you from lots of unnecessary losses. Yeah, that's a lunchtime zone. We don't really care about that. We are not looking for trades on this, but this is still a demand zone. Even though this has been formed in lunchtime, this is still a demand zone. We are mainly expecting a break of this zone, not a hold of this zone. As you can see, price is breaking below this zone, mitigating the 50% of the overall 5-minute demand zone right here. and the 5-minute break has happened with body closure, as you can see. And since this is a 5-minute zone and not a 15-minute zone refined to the 5-minute, this will be considered as a bit of a lower probability zone. So if a 1 minute, and that was one of your doubts, guys, that if a 1 minute break happens on this kind of 5-minute zones, so for example, this zone, this 5-minute zone can't even be found on the 15-minute chart. So if a 1 minute break of this zone happens on the 1 minute, the 1 minute break of this 5-minute zone happens, then you'll be able to take 1 minute continuations, because this cannot be considered as a 15-minute zone, because it can be even found on the 15-minute chart, and it is not even a single variable zone, because if you switch to the 15-minute chart, you'll see that there was not even a change of character on the 15-minute chart. So this is literally not a demand zone. So we can't really consider this zone as a demand zone because it has literally created nothing on the 15-minute chart, not even a tap of the supply zone, not even a change of character right here. So literally it has created nothing. So it can be really considered as a demand zone. So if a break of this zone happens, if a break of this kind of zone happens in the future, so just listen to me, if in the future a break of this kind of zone happens, you'll be able to take a continuation trade on these zones if it breaks, if it's being broken, with a single 1 minute confirmation, because these can be considered as demand zones. And if you're trading pro trend, and if you're, for example, your POI, the POI that has broke below this kind of a zone, this kind of a 5-minute zone, swept liquidity with inefficient movement and created a break of this zone, and you're trading pro trend, you could easily execute a setup based on that, based on these criteria. Because if I play one more candle, you'll see that, not with this, if I play one more candle, you'll see that the clear break of this zone has happened, right? The clear break of this zone has happened. And sorry, I'm just, okay, sorry. So the break of this zone has happened. And if the break of this zone happens from this candle, you'll be able to take a short continuation trade on this candle, because this candle has swept liquidity. As you can see, this candle has swept liquidity right here at this region. So the criteria for this zone is perfectly fit, right? What criteria do we need for a zone in order to be valid? We need a liquidity creation / liquidity speed. We need an efficiency. We need a zone break / change of character / break of structure. So this zone has broke structure to the downside, has broke zone, has swept liquidity, and has created lots of inefficiency. So if this scenario happens, and this scenario happened, you can see, you can simply open a position based on this supply zone that has caused the overall break of this zone. Because as I said, this zone, and just remember for these guys, this zone can be considered as a demand zone. So this is not a real demand zone because it couldn't take a supply out. As you can see, if I switch to the 5-minute chart, it couldn't even take a supply out. So this wasn't a supply right here. This wasn't a supply zone right here, because this supply zone couldn't break below this low point. So this can be considered as a supply zone because there was no break of structure, there was no liquidity, there was only inefficiency for this supply zone. So this isn't a supply zone. This demand zone couldn't take a supply out. So in order to become a valid demand zone, it has to take a supply out. It didn't take a supply out. Not even the 15-minute, not even the 5-minute, nowhere. Didn't break below, above this structural high point, didn't break the overall supply zone. So basically, this is not even a structural low point. This was just a small pullback. And if the zone, and if the break of this zone happens, you'll be able to safely execute the short position. As I said it several times, but it's really important because I saw that lots of you guys were confused about this trade. And why did I put this in the case study? So if the break of any kind of this zone happens, with a good entry criteria, with a good confirmation, for example, liquidity sweep right here, inefficiency, break, anything, you'll be able to take this continuation trade to the downside. So I will just take this continuation trade to the downside. With the 2 pip stop loss, because as you can see, the 2 pip stop loss can easily cover the highs right here. And yeah, this was one of your problems too, that can this be considered as liquidity right here? I've already explained this in several videos. I've already explained this in recap videos too, that 4 equal candles next to each other can be considered as liquidity. So this isn't liquidity right here. This is just a stop in the market. This is just a high point, not liquidity. Liquidity has to be separate from each other. So for example, for liquidity, you need several touches of that high point. And between those touches, there has to pass minimum 2 or 3 candles. So this downside movement has to happen with 2 or 3 candles. this has to happen with 2 or 3 candles, this has to happen with 2 or 3 candles, and this has to happen with 2 or 3 candles. So this can be considered as liquidity because this isn't a liquidity, this is just a simple stop in the market. So that's why it is not risky to actually place a limit order on this high point, because this is not part of the liquidity. Okay, so our overall target point could be this low point or the case study low point, which have been targeted in the case study 2. I don't know which was that low point, maybe this one right here. I believe this was the target point of the case study, right?
Yes, this was it.
That was it, right? Yeah. So that was the target point of the overall case study. And once again, this is a really, really good continuation trade, because this POI has swept liquidity to the downside, broke a 5-minute zone, which can be considered as a real zone, broke structure, created huge inefficiency, etc., etc. So I will play a price forward, and you see that that price is perfectly tapped into this zone. And that's why I sent you this in the case study, guys, because this was a perfect entry opportunity. And I hope it cleared some of your doubts that this couldn't be considered as liquidity. And if price creates equal taps right here, that will be considered as liquidity. So as you can see, if price steps into this zone, this can be considered as liquidity right here. This is liquidity right here, because this was the first tap, 2-3 candles passed, 2-3 candles passed, second tap. So this is liquidity. Now this can be considered as liquidity, and you can't open a position on this fresh new form supply zone right here, because this could be part of the liquidity and you have a chance to be swept. But this zone wasn't part of the liquidity. The mark zone, the first entry point zone, this wasn't part of the liquidity. Now this is part of the liquidity. And this is really, really important, guys, to memorize this, that these 4 equal candles or 5 equal candles or 15 equal candles can be considered as liquidity. Only these can be considered as liquidity. But I've already broken it down in the recap video. I will link that recap video for you guys in the question channel. I don't know where, I just ping it. So please just take a look at that video. And as you can see, price has perfectly tagged the sim. And after this, price started to create a huge inefficient movement to the downside, which was leading to a breakout structure here to the downside. That was a less recent breakout structure, meaning we could aim for a continuation trade, right? And here comes the same scenario once again. I sent you this in the case study, guys, that this could be a perfect entry continuation, because there was a breakout structure, there was another liquidity sweeping movement. As you can see, price has swept loads of liquidity from below this region with this movement, even swept this trendline liquidity, because this could be considered as a trendline liquidity too, because first touch, up, down, second touch, up, down, up, third touch, trendline liquidity. So this POI has swept liquidity, created inefficiency, created breakout structure. So this could be considered as a good supply zone. That's why I sent you in the case study that this is a good supply for continuation. And once again, lots of you guys has messaged me that this was liquidity. And why did I send you in this case study that why did I open a position inside of a liquidity pool? Because this wasn't a liquidity pool. This can be considered as a liquidity pool because this is 5 or 6 equal candles next to each other. These candles can be considered as liquidity. This isn't liquidity. Liquidity has to look like this. So liquidity has to look like this. If it's a double tap, if it's a triple tap, or it's a trend line, time has to pass by between those candles. Price action has to pass by between those candles. And if the several touches with 5, 6, 7, 8, 9, 10 candles happen, and time passes by between those candles, and the touch happens with time passed by, that could be considered as liquidity. But 4, 5, 6, 7, 8 equal candles couldn't be considered as liquidity. Is it clear for you now, guys? Can you understand this? Can you memorize this? Because it is really, really important.
Yeah.
So that's why it wasn't a part of the liquidity right here, and that's why it wasn't part of the liquidity right here. Now that's part of the liquidity. Now this is liquidity, but this isn't liquidity. So that's why I've sent you in the case study that this could have been taken, because this was also a perfect trade, and I forgot to set the limit order on this trade too. So this was a perfect trade, targeting the same line right here, the last recent low point. And let's see what happens. We already know what happened. Price has created a huge inefficient movement to the downside, as you can see, giving us a perfect risk-reward ratio, giving us a perfect continuation, as you can see. And there weren't even news. And once again, right here, now, this can be considered as liquidity. This is liquidity now. because here's the first tap, here's the second tap. But this can be considered as liquidity. Let me just zoom in once again. This isn't liquidity. This single tap isn't a liquidity. This candle, this candle, this candle, this candle, this candle, this candle isn't a liquidity. This isn't 3, 4, 5 taps. This is just a single tap. This and this tap can be considered as liquidity. So I really, really want you guys to memorize this because it's really, really important. Now this is liquidity. And as I said, if price can break below this low point, maybe so if price can break below this low point with a body closure on the 15-minute chart, then we'll be able to look for short continuations to the downside. But if price can break below this low point with a body closure on the 15-minute chart, which has actually happened, so as you can see, if I switch to the 15-minute chart, price couldn't body break below this low point right here. So there wasn't even a body break. This could have been considered just a liquidity sweep. So that was a mistake. That was my mistake with this trade that I took on Friday, that I was looking for a continuation trade on this supply zone, even though this supply zone is not even a supply zone, because this supply zone has created nothing. It didn't break below the last recent low point. It just fed the liquidity, and after a liquidity sweep, we can expect a reversal, right? So liquidity sweep, reversal to the upside. Couldn't break the structure to the downside, price has to collect more liquidity. That's how things work. And that was my mistake in this trade, that I was expecting a reaction on this supply zone. I was expecting that price will create a reaction on this supply zone, not even this supply zone. I believe that was a 5-minute supply zone. Yeah, I was expecting a reaction on this supply zone right here, because I thought that prices broke below this low point. And that wasn't a break. And that was a mistake right here. Let me just write the questions, please, for the continuation. Yeah, those criteria are perfectly enough. Pro trend, liquidity sweep, inefficiency, break of structure, flip, etc., etc. These are perfectly fine criteria. You need liquidity creation or liquidity sweep, but combined these two together are the strongest combination. But for this criteria, you need either a liquidity sweep or either a liquidity creation. So yeah, I thought that this was a break right here to the downside, and I was expecting a reaction on this supply zone. I would just close these zones because they are annoying. And I was expecting a reaction on this zone. I was expecting that price will create an upside movement to this supply zone, which has happened. And I even sent you this movement in the market updates. And I was expecting a reaction on this supply zone. And I was looking for a short continuation to the downside. But that was my mistake right here, because this supply zone couldn't take the demand zone out. This supply zone couldn't take the low out, meaning this will be weak. Because if this supply zone can take a low out, can take a demand zone out, it will be unvaluable. So more likely price won't be able to reverse on this zone, and it will break above this zone, because it couldn't take a demand out, couldn't break structure to the downside, meaning it will be valuable. Price will has to collect more liquidity from the upside, and this zone will be part of the liquidity because it is weak. Which zone is strong? This zone is strong right here, right? Or even this zone is strong right here, or even another 15-minute zone is strong, which just took a demand out or created a break of structure to the downside. And this zone right here is a valuable zone, because this 15-minute zone, refined to the 5-minute chart, has broke structure to the downside, created a change of character on several places, has a liquidity just below it. And this is a really, really strong zone for us. So this can be considered as a strong zone. This zone can be considered, this decision zone can be considered as a strong zone because it couldn't break structure to the downside. And literally it's in the middle, it's at the lowest point of the leg. So this is right at the premium region. So yeah, that was a mistake, but I backtested my mistake. And at least we know that wasn't the right trade idea. And at least we know that that can be continued. So in the future, we'll pay more attention to these kind of scenarios. And we won't expect a reversal on these kind of zones because we'll know that those were just weak zones, right? That's why we are creating case studies. That's why we are creating backtesting sessions to learn from these. Let me just read this. Please, John, just answer. So as you can see, after price couldn't take the low out, I mean, could take the low out, but couldn't break below the low with body closure, it just reversed to the upside. But this reversal can be considered as a counter trend trade. And this could be considered as a pro trend trade on the 5-minute chart, so the 15-minute chart, if price can break above this supply zone. And if the break above the supply zone happens, then we'll be able to take long continuations to the upside. Because if this supply fails, that will be meaning that demand is in control, demand is in the market. And at this region, price will continue the upside movement to this supply zone. So let me just play price forward. And as you can see, okay, here's another adaptive topic that you guys didn't understand, that why did I consider this candle right here as a demand zone? And now I will break it down because it's really, really easy. I already broke it down in the case study, but I don't know if it was understandable or not, but it's much, much cleaner if I just break it down. So as you can see, price was creating an upside movement. It was creating upside movement, and at this candle, prices reached this high point. That was the high point, and price has closed here. This candle has closed here. So meaning after the high point has been created, price has created a pullback. So this was a pullback right here. This is a pullback candle. And from this pullback, on the second chart, that could have been found a good demand zone. Because from this pullback, another inefficient movement to the upside has started. As you can see, this candle has started another inefficient movement to the upside. So there was another break of structure to this, another break of structure to the upside right here on the second chart, because this could be considered as a pullback right here. There's a price action, there's a footprint of this price action. After this, price has created this high point again. The next candle has opened, it has gone up, and after this high point has been printed, price created a downside movement again. And this downside movement has tapped into this less recent demand zone that has created a pullback, and after the pullback there was an efficient push, and this pullback right here tapped into this second demand zone. There was a tap of that demand zone, and from this tap, price has immediately reversed, because as you can see, the candle has opened here and the candle has closed here. So the open point was right here. After the opening point, price has created a pullback, and after the tap of that second demand zone, price has just immediately reversed to the upside and closed here. So meaning this is a demand zone, meaning this week is a demand zone for us, because from this demand zone, price has created an inefficient push to the upside. And from this demand zone, at this demand zone, lots of orders have been placed into the market. And this demand zone has caused the push of the less recent inefficient push right here and caused the tap of this supply zone. Meaning this is a demand zone. And if price breaks below this demand zone, that will be a change of character, a weak change of character. But in a pro trend, a weak change of character is perfectly enough for us, right? So this can be considered as a change of character right here if price breaks below that low point. And we already know that prices broke below that low point, as you can see. So this could have been considered as a change of character. And that's where my trade idea came in. I've opened the position right here on the supply zone, on the 50% of the supply zone, and with the 3 pip stop loss because the zone was too huge for the 2 pip stop loss to cover the whole zone. So that was the trade idea. I opened it with 30 ticks, 3 pip stop loss, and I was targeting the low point again. I was targeting a weekly low point. I believe that was my target point, the overall target point for 1-to-11 risk-reward ratio. But as I said, this was a bad trade idea, because this supply couldn't take the less recent low out with a body closure. So this supply isn't a supply zone. And this was just a fake pull. This was just a fake reaction right here to actually trap the sellers. This was a movement to trap the sellers. And lots of sellers have been trapped into the market right here at this region. Even me, even you guys, lots of us has opened this position and we've been swept out from the market. But we found the mistake, that was our mistake, that we opened the position of weak supply zone. So this was a weak structural point. This wasn't a strong structural point. So let me just play price forward and you'll see that this supply has been swept. And there was a no tag actually, as you can see, but liquidity has been created. Liquidity point, liquidity point, liquidity point. So liquidity built up for this zone. I was more sure about this trade. That's why I took this trade. My zone has been tapped, as you can see. My 3 pip stop loss has kept me in. And I did set my stop loss to break even right here at this region because upside movement inside candle demand zone, upside movement break of structure, liquidity movement right here, break of structure, last low point break. So I did set my stop loss to break even. And there it goes. There it goes, as you can see. So this trade did hit break even for me, but at least I know that this wasn't even a valid trade. This was a bad trade. As you can see, price has mitigated the 50% of this zone and almost the full percent of this zone. And after this, prices flip this zone. From this candle, price will flip this zone, as you can see, with perfect inefficiency, meaning demand is in control. And as I said, if this zone is being flipped, then we can expect a reaction on the less recent demand zone that has flipped this zone, this supply zone, and we can expect an order flow up to this supply zone. And after the liquidity collection from above this region, and after a tap of the supply zone, we can expect another change of character to the downside, and we can expect a cancellation to the downside, because that's how the order flow works. That's how the actual order flow in this price action region works and looks like, creating downside movement, breakout structures, upside movement. Downside movement, no breakout structure right here, has to collect more liquidity, upside movement, tap of the supply zone, downside movement. This is the expectation order flow. This is how the expectation order flow works like. Okay, so for this zone, we needed a liquidity creation, right? Because as I said, for cancellations, it has been said in the, I don't know which familiar, for this kind of cancellations, we need a liquidity creation. So if price creates liquidity right here at this region, we'll be able to set a limit order right here at this zone. So let's see. We already know that there was a liquidity. As you can see, price has created a perfect liquidity for this zone because this is a liquidity. As you can see, this can be considered as liquidity because this candle has pushed up. Let me show you once again. This candle has pushed up. There was a pullback at that candle, pullback, another push to the upside. Lots of price action has passed by right here. Lots of price action, lots of candle has played out. Another push down, another reaction, 2 candles printed once again. And this is a liquidity. This can be considered as a liquidity. But 3, 4, 5, 6, 7, 8 equal candles next to each other can be considered as liquidity. So in this scenario, we are safe to set an order limit on this zone. Targeting this supply zone up here. Because as I said, if this zone is broken, we'll be able to target the next recent valuable supply zone. And this supply zone up here is valuable because it takes out lots of liquidity, change character on several places. So basically, it's a good target point overall. And as you can see, price will tap into this zone. So once again, a perfect entry opportunity, which has been missed by me because I wasn't trading at this region. And a continuation will happen to the upside, as you can see. Of course, a small pullback first. That was a small pullback to some demand region because, as you can see, this demand zone has created the liquidity sweeping movement, and this could have been a good entry opportunity once again. I didn't send this in the case study because for me it wasn't a go-to zone, because as you can see, this demand zone has swept lots of liquidity. Actually, there was the first tap of the liquidity, second tap of the liquidity, third tap of the liquidity line. This demand zone has swept the liquidity with this inversion movement to the upside, breakout structure 2, and liquidity creation for this zone 2. So this could have been another good entry opportunity, but I believe this wasn't even 1 to 5 risk reward ratio. Let me just check. 1 to 5, yeah, we should have used 30 ticks stop loss. So yeah, this wasn't even 1 to 5. That's why I didn't send you in the case studies. And after this, price will continue the upside movement to the supply zone, as you can see, and mitigate the supply zone. And that was the overall session at that day. And all of these three trades, this trade, this trade, and this trade have been missed by me. I did not take these trades. I only took this trade right here at this trade because I was so focused on the short side of the market. I was so focused on good opportunities that I didn't actually see that these opportunities have played out. I didn't actually see that prices actually changed the bias. Yeah, I could say excuses that I was tired, that I was in profit and I didn't want to force setups, but I didn't see these setups. But not right now that I'm backtesting these setups and I was made a case study about these setups, it has become obvious for me that prices actually changed the bias and there was good entry opportunities beside of this entry opportunity. So yeah, that's why it is important to create case studies. That's why it is important to create backtesting sessions for yourselves, because you need to create these setups. You need to create these case studies, backtestings to actually understand what price is doing. Because if you're just trading live and if you're making mistakes in the live trading session and you're not backtesting those mistakes, you'll be just confused and you won't understand price action. You won't understand what's happening. You won't understand the futures price action. You'll be just lost. But if you do these backtesting sessions and you do the case studies, you will understand how actually market works, because you see the footprint of price. Everything is in front of you. So you can see every single price action that has happened. You just have to read that. You just have to analyze that. And you just have to learn from that and take notes. And that's why it is really, really important, because I realized that I made a mistake right here. I just wanted to find my mistake. I couldn't sleep without finding my mistake. That's why I created this case study. And I found my mistake, that I was on the wrong side of the market, because price couldn't create a breakout structure right here to the downside, couldn't create the last swing low point break, meaning this supply was unvaluable. I found my mistake. I'm happy with my mistake because I made this mistake and I've learned from this mistake. And in the future, I won't make this mistake again. That's the purpose of the whole backtesting. That's the purpose of the whole case study making. It's really, really, really important. So let me just read the chat. Yeah, the second trade could be risky. This second trade could have been risky. But I just show you that this was on chart. I just marked it because this was on chart. And this trade has actually had good criteria. It could have been easily a simple liquidity for the upper zone. It could have been easily a simple liquidity for this upper zone. But, you know, it has been played out perfectly. It has been played out because the criteria were good. The criteria were good because it's swept liquidity, it has created an efficient movement, it has created breakout structure, etc., etc. So the criteria were fit. In this scenario, for example, in live trading, I would have just set a risk entry on this supply zone and on this supply zone. This would have been my plan in live trading session. And more likely, if the downer zone can't hold price, then price will just go up to mitigate this supply zone here. And it will split the liquidity, and this will be a minus 0.5 risk reward ratio for me, person, and this will be a tagged in, and I can write the expectation order for the downside. But this is a case study, and I showed you that this has happened on charts. And yeah, I just explained the criteria, but there's still a chance that this could have been a liquidity for the upper zone easily, because this happens, these things happens. I have a question. Let me just hear the question. Any questions, guys? Why use 3 pip? Because I use 3 pip stop loss right here because it couldn't cover the whole zone. And these days, 2 pip stop loss can't really cover the zones, because if you take a look at the previous price action on this week, all of these candles are fucking huge. Just take a look at these candles. All of these candles are like 5 pip, 10 pip candles, and the 2 pip stop loss can't even cover these zones. As you can see, this candle is 3 pip. These candles are 4 pip, 5 pip. So these are huge candles. And all of these candles have been printed in less recent price action days. And this candle was too huge too. But I was so forced on the short side of the market. I was looking for short opportunities. For really, I just wanted to enter in a short trade. And I did want to set 3 pip stop loss right here because the 2 pip stop loss couldn't cover the whole zone, even with the 50% entry too. So as you can see, with the 50% entry, this was the 50% entry somehow, and this couldn't even cover the whole zone safely. So that's why I just used the 3 pip stop loss, because that covered the whole zone safely. And yeah, that's the reason. Any questions, guys, about this session? And sorry if you didn't like this session or anything, or you just wanted another usual backtesting session. But I just wanted to break this price action down at this day, because literally I just received loads of questions. I just received loads of questions and I didn't want confusion. And it was so important for me to break this actual price action day down, because I didn't want to leave you guys confused. And for some of you, this might have been boring, or you didn't like this session. But for me, it was good because I broke down every single doubt. And hopefully for those people who have doubts, this session was useful. Yeah, but just remember for the liquidity, guys, because the liquidity is still there. Just remember for this liquidity scenario that this isn't liquidity. 4 equal candles isn't liquidity. This is liquidity, this is liquidity, this is liquidity, but this isn't liquidity. This will protect you from so many unnecessary losses and will give you much more wins, because if you're confused about the liquidity, and if you're not opening a trade because you see 4 equal candles are being printed for, like in this trade, then you are safe to go, because this isn't liquidity. But I've already broken this down in several recap videos, for real. Very helpful. Everything was good. Very great session. Awesome. Very good. Was nice. Perfect. It was really helpful for me. My first live session. I loved it. Can't wait for the next one. I think everyone else agree with me. Yeah. Thank you, guys. I'm really glad that you enjoyed this session. So it wasn't boring for you at all. Once again, sorry, but I just really wanted to host this session. Do you sometimes refine the 3 minute? No, I never use the 3 minute. Never. And always look how the 15-minute close. Exactly. But you know, I say these things in every single recap video, that you have to pay attention to the higher time frame too. If you're stuck on the 1 minute chart, if you're only stuck on the 1 minute time frame, you can't be profitable. Because if you're only stuck on the 1 minute time frame, you'll be lost in noises. Because the 1 minute chart is a noise. It's a fucking noise. There's no other words for the 1 minute chart. This chart is a noise. It's a simple mess. But if you combine this knowledge, combine this chart with the 15-minute chart, then it will be much more readable. But if you're only trading on a 1 minute chart without even switching to the 15-minute, 5-minute chart, you'll be lost. You'll be lost in the noises. Because I saw that lots of you guys, literally lots of you, and I'm not just saying that lots of you, literally lots of you guys are opening positions when there's literally no 5-minute breakout structures, there's no 5-minute zone. For example, price is just creating continuous 1-minute movements to the downside, creating liquidity, and you are opening inside of a liquidity pool, opening inside of, for example, a triple bottom, triple top, anything, without even waiting for a proper higher time frame tap. EU structure is really similar and maybe too easy to backtest. Is it okay to backtest any other pairs? I don't think so that it's really easy to backtest. I don't think so that it's repeatable. You can always find new patterns. I'm still finding new patterns. I'm still finding new things on you. And I'm still implementing more things into my trading plan. And I'm still educating you guys more things. Because webinar by webinar, I'm showing you new things. And I find those new things by backtesting and by making case studies. And if I can find new things, this isn't boring. And if you're backtesting another pair, that won't be helpful if you're trading EU. Because if you're trading Euro USD, you can't just backtest GBP USD, because GBP USD has a completely different characteristics than Euro USD. And you'll be confused because you, for example, backtested a good scenario on GBP USD, and you'll be pumped that I will use this in my live trading, and you're trading EU, but backtested GU, and you'll have a loss because Euro USD is completely different from GBP USD. So if you're backtesting Euro USD, trade Euro USD. If you're backtesting GBP USD, trade GBP USD. Don't switch the pairs. Okay, guys. If there aren't any more questions, I will just start the recording.